Good afternoon. This is Chris Brecher with the Simpler Stocks free video for June 29, 2016. This is the airport edition. I was doing the seminar in Austin, going on the 2:30 flight. So you can see on the bottom here, I'm not sure it shows on here, but actually, as you see, it looks like 2:30. This is actually 1:30 Central. I'm boarding at 2:30. I have no time to do the video when I get home, so you're going to hear a lot of background noise, so I apologize for that. So today was all about an oversold rally. You have the ES is up 29, NASDAQ up 75, Russell up 21, bonds doing nothing. You would think with this bounce we'd have bonds down a couple of points, and they're holding in like a champ, down only 2. You have crude oil up 157, gold down a little ease of the flight to quality. That's why bonds are down 2 and the gold down 660. Advanced decline very strong today, over 2,000 more advancers and decliners. Like I said, SPX up 2, VIX down 4, but it was down yesterday also. Nikkei up 320. As you see on here, you have the dollar down somewhat. Wheat, not just nothing to write home about. So let's go right to the market and show you what I mean in here of what's going on. Number one, bonds doing hardly anything. ES is up near their high for the day. What do we gain from this? Number one, you have that everybody on TV was talking about a dead cat bouncing. You know what? We didn't sell off at all. That's exactly what happens a lot of times when you get this kind of move, where you get this triangle here, everybody gets caught right there, and then when you get over the ATR trailing stop, they're stuck. And the whole idea in this is you have to wait for a cross before you even think of shorting the market in here. Now, I know on a daily, I think it looks incredibly precarious, no doubt about it. But just realize you can't just jump in the short side just because it should go down. You have to wait for the triggers, which we don't have yet. Now, in the meantime, what were we watching? Yesterday, we made a lot of money in the REITs in here. PSA, we were talking about buying it down here, but let's put it in a 15-minute chart. Sorry about the pointing tools down here. We were talking about buying it right when it formed that little flag, broke out. Guess what? 9 points. That's a pretty good return in a bad market. A lot of people are saying, well, the converse. You buy the REITs when interest rates go way down and the market goes down, you can buy them on the opening. You see, you could do that on Friday and on Monday. Well, they were like, well, we're way up today. Can't you short them? You can't because the bonds are only down 2. The criteria is the market being way up and the bonds being way down. You can grab a short in PSA or any of the REITs or interest rate sensitive stocks. We just don't have that criteria yet. Now, we might the next couple of days, but just not yet. So what are some of the other things you do in here? Number one, you sell volatility. When you look at Amazon, you look at the SPX, you see the futures up 30. Guess what? That means the last 2 days, the market's unchanged. Do you realize how the volatility falls apart with that? That's why you have Amazon here. Look where it was gapping down yesterday and up today. In this area, it's basically unchanged. Now, the danger is if you're short, is that you had this gap down and gap up, that this could be an island reversal. But when the daily is breaking the ATR trailing stop, I'm just not convinced yet. But you could sell straddles like around 700, and they worked wonderfully in here. Same with Goldman Sachs. Goldman Sachs looks awful on a chart. Look at it on here. Sell the 140, some kind of spread around 140, and it works great. The expected move for the end of the week is 4.5. You really look at this, it moved 10 points, sure, 8 to 10 points on Friday, but really on Monday, it didn't move much at all. It moved a 1.5. So I think the expected move is too wide, so that's one thing you could do. Second thing in here, you can short the defensive stocks that had this unnatural rally because everybody said, well, we got to put our money somewhere. As you can see on here on Kellogg, look at this. Opens down and then forms this beautiful bear flag, and you could have shorted that right after the first reaction. So this worked great in here. Now, like you know, we have still the $7 30-day trial in that, and I'm going to log in and show you what it has in here. If I can do this in here, you get the email alerts, you get the chat room, and I'll go right to it so you can see it in here. If I get it to work. Right there. There's me with my body photoshopped, really humiliating in here. But basically in there you get the email alerts where I send out alerts on stocks, options, and indexes. Usually about 6 stocks a night, 6 indexes, and if I see some unusual action activity, I send it out. What do you get else? You get a chat room 9 to 10 in the morning. Today we actually went for 2 hours and combined my simpler options live session. You also get a web series where almost every Wednesday we do like a last hour and go over correlations, trend lines, anything that people want to talk about. And those go into a video archive that's been a big hit. So I hope everybody's enjoyed this video. Like I said, the key is oversold rally to resistance, look for the cross, and then you can jump on shorts. Have a great night. Talk to you later.